Welcome back. Bob Pisani here with the ETF Edge portion of our show. Our guest today, Tom Lydon from ETF Trends, Paul Delaquila from Defiance. And the SPAC boom remains the big story of the summer, so much so it now has its own ETF. Paul, you just launched the Defiance SPAC ETF. That was just a couple weeks ago. Now, explain to us, how does it own SPACs when in most cases we don't even know what the companies are going to be owning for about 2 years?
It's a great question, Bob. Thank you for having me on the show. And I actually think that's part of the appeal. So what we did with SPAK, it launched on October 1st. What we're providing investors is a combination of those pre-IPO SPACs, the biggest, the most liquid ones that are in anticipation of doing a deal, as well as those post-IPO SPACs that have merged, and those companies that have already IPO'd, like a DraftKings or a Clarivate, for instance.
Yeah. Then I want to move on and talk about the IPO business a little, Tom. That's also on fire. The other part of the going public aspect, the IPO ETF is up almost 200% since the March bottom. It's just shy of a historic high right now. Asana, Palantir, GoodRx, Unity Software, JFrog, all of them seem to be working this year. What could go wrong, and do you anticipate being even higher towards the end of the year?
Well, as you know, Bob, there's a lot of pent-up demand. The number of companies going public are only a third of what we saw 10 and 20 years ago. So especially with innovation, as Paul's pointing out, this pent-up demand and being able to institute the SPAC program is really, really helpful. However, it's diversification. So if you look at the SPAC ETF, there are only 5 companies that make up almost 50% of the market cap there. We're going to see more coming in, and to a great degree, as Paul said as well, we don't always know what the underlying are going to be. It's kind of like a box of chocolates. You don't know what you're going to get. However, we're on the cutting edge, and I love that SPAC ETF because we're going to be able to invest in companies pre-IPO, and there's a huge amount of demand there.
Yeah, and Paul, just to clarify this, 80% of what you already own are SPACs that have already announced the companies that they're buying into, essentially. You're only 20% is really what you've got is companies where you don't exactly know what they're going to own. So the uncertainty factor is somewhat reduced here. Am I correct? Paul?
That's correct, Bob. And as Tom pointed out, there is going to be a maturation to the SPAC market. So we think this product is very indicative of where the market is today. And as it expands and as it matures, you'll see the ETF evolve as well.
Okay. Paul and Tom, of course, thanks very much.